Good morning, trading analysis viewers, YouTube viewers, investors, traders alike. Thank you guys for tuning in this morning. My name is Bennett Tyndall with tradinganalysis.com, filling in for our fearless leader, Mr. Todd Gordon. He did have a follow-up appointment for his knee surgery this morning, so we figured we'd give him the morning off and let him take care of that. But no, the recovery process is going well. Everything's been pretty smooth. So, you know, ACL, MCL surgery. Anytime they're doing any major operation on something as critical as your knee, you got to be careful. So thanks again for tuning in. We're keeping our eyes on the pre-market this morning. We've seen some interesting price action in the S&P 500 as of recent, and we do have core PCE on Friday. We'll talk a little bit more about that in just a minute. But before we do so, let's go ahead and bring in the trading analysis team. Good morning, Alex. Good morning, Terry.
Hey, good morning, Bennett.
What's happening, guys? Uh-oh. We lost Terry. I think Terry got muted. Maybe it looks like it's on his end.
There we go. Sorry. Good morning, guys. Good
No
morning,
worries.
Bennett, Alex.
What's happening?
Summertime. Almost here. School's almost out.
It is. We're going into Memorial Day weekend, so we've got a heading into the summer. Things could get a little bit slow, but it's pretty.
You think?
typical.
I don't find that always the case, Bennett.
No, not always. Certainly not always.
We see a little activity pick up from May. Is what I'm actually looking forward to. I was checking out some seasonality charts in the S&P. I hadn't shared them with you yet, but yeah, it looks like June actually looks like a much better month than May, at least for the past 10 years. So we'll have to look at that and come up with some dialogue around that.
We're close to finding out. Just a few more days left in the month, and we'll be heading into June. Let's see, what else do we have going on, guys? Alex, what's happening in your neck of the woods? We got a move lower in crypto. You think this is that wave 4 that you've been after?
Yeah, well, lots of happenings there in the last week. I mean, it's still not clear, but looking all of the standard measures that we are looking, I think possibly we are in a longer consolidation because if you move out so quickly, 1 trillion down in value, I don't think that is so recoverable like some people expect in a couple of weeks or a couple of days. 1.1 trillion was wiped out from the crypto market in less than 3 days or 4 days. So wow. I don't think that what we have accumulated for almost 8 months can be recovered so quickly, especially in the Bitcoin with the miners moving from China and some other problems. I think it will take some time, but I'm staying bullish still. I mean, it's still, we are probably still in a big consolidation, which will result in a further upside.
Yeah. It's been an interesting move off the top there. Terry, I didn't mean to interrupt if you were going to jump in.
No, I was just saying, wow. I mean, it's, you know, of course, it seems like it likes to go down a lot faster than it goes up, and that's people taking their profits off the table when they see an opportunity. And then they cautiously re-enter the market, and that's why it's generally much slower on the uphill rise to re-infuse $1 trillion back into the cryptocurrency markets. That's probably going to take longer than 3 days, in my opinion. So
yeah,
I can certainly see it coming out in that fast a time.
Yeah, I mean, sorry, you have this when you look the stock markets. They say they goes up in steps and goes down with elevator. I think that this elevator is kind of more of a Dubai tallest buildings. It's an elevator which goes more than 200 or 100 and something floors in less than 5 seconds. So if it's a very speed elevator to the downside, that's definitely much faster than stocks, you know.
Yeah, it was an interesting move. I think longer term, this is why it's always important to be considering your time frame. Is if this is that wave 4 that we've been after, you know, the implications of the 5th wave are, you know, at the very least to retest our previous 64,000 area highs. So We'll talk more about crypto in just a minute. We also have Alex's show tomorrow morning on the Trading Analysis YouTube page. But guys, let's jump into it here. Keeping our eyes on pre-market. Starting to see a bit of a move lower. Last night when the future session opened back up in the evening, I saw an interesting move with the gap down in bond futures. Simultaneously, we saw gold pushing through 1900. So I'll be back with you guys in just a minute. I'm going to take them through a spin of the Motive Wave platform, take a look at the indexes, and then we'll jump into sector focus, and then we'll hear from Alex. Sound good, guys?
Yeah.
Right.
All right. I'll see you in a minute. Good morning once again. And hey, we do apologize for the technical difficulties that we had last week. You know, it never fails. We have a year, 2 years of a very successful show with very few glitches, and then the day that we get a big move in the pre-market, or one of the days we get a big move in the pre-market, we run into some technical difficulties. But we've got it solved. Turned out to be just a weird registration bug. So we apologize for that. We are working on some backup solutions so that I can have a secondary dedicated streaming unit here in the office in the event that that happens again. So let's jump into it. Hard right edge of the Motive Wave platform, starting it off with a view of the S&P 500. And before I break you down this 20-minute chart, which is essentially taking us from the March 4th low, let me just take you back to the daily. So on the daily chart of the S&P 500, and I really love the flat completion that we had actually back into the COVID low. What's really rather interesting and fascinating about Elliott Wave, and I see this unfold in indexes, market indexes, sectors, I see this unfold in individual equities. You'll have a situation where the pattern development implies a certain outcome. And then you have a catalyst that then kind of sets the social mood up for that particular move, the advance decline to actually unfold, to materialize. It becomes the catalyst for it. I was doing some work on, we've got an upcoming summer event that's going to be taking place in July with the whole trading analysis team. We've got more information on that later. I think you guys will really enjoy it if you're interested in Elliott, interested in learning Elliott. It's going to be a really fun event and something we haven't done before. But I was putting some content together, and I'm looking at this chart going back into, first of all, coming out of the summer consolidation. So, you know, here's an instance where May of 2019, we topped out in the A wave and we consolidated in an Elliott Wave triangle, concluded in October. We pegged the initial little small degree 1-2 out of the triangle, which gave us a really well-defined zone of risk, right? A move south of the origin of that initial impulse would have invalidated our trade setup. So Todd did a really nice job trading this, and as we approached this high here in B, we did see a fairly significant external retracement of the A wave decline, yet we still had a 3-wave move up. So with 3 down and 3 up being in a higher degree 4th wave, that leaves us with a couple of possibilities. Possibility number 1 is we're in an Elliott Wave flat. Possibility number 2, we're in some sort of an Elliott Wave triangle that could potentially be expanding. That was a possibility we considered for some time. But ultimately what ended up happening is COVID came along and the social mood was set up for this very sharp C-wave decline. I think the majority of us in the world of Elliott can agree that that was the wave 4 low. The question then becomes, from that wave 4 low, which, by the way, the C wave, the actual low of that particular move was 2191.86, an intraday low, versus 2122, which would have been a 127% external retracement of the B wave advance. Very common for those of you who know your fib relationships of Elliott patterns. The question then becomes, off of that low, what on earth is going on? Is this impulsive? Is this corrective? Could this potentially be part of some larger expanding triangle? I think that's highly unlikely. I think this is the uptrend resumption in that higher degree 5th wave. Now, the count off the March low is a bit subjective. There are a couple of different valid interpretations from a rules standpoint. None of them really follow the guidelines really closely, and that's why there's been a bit of a debate in the Elliott Wave community. What I proposed to you guys a few months back was this. from the November or October 30th low, we had this advance with a lot of overlap here. And then finally on March 4th, we start a very sharp, clear, impulsive trend up. You have a three-wave move down in wave 2. That was a 50% retracement. It was a measured move correction. Secondary corrective leg was equal to the initial corrective leg. Okay, from there, we established the upside targets. We gave you 2, which is just simple equality of 3 compared to 1 at 41.23. The 1618 objective at 42.99 has not quite been met. 42.35 has been so far the high. Now, this pattern, our kind of takeaway once we saw this initial 1-2 print, came out on March 27th and said, look, if this is the completion of that wave 1 off of the COVID lows, fine. If this is some sort of 1-2, 1-2, and I'm improperly identifying and labeling the structure, fine. Regardless, we felt the 5-wave move here would take us into, at the very least, into the summer, at which point maybe we were up against a larger corrective pullback. Now, things following the May 12th low have been a little bit tricky to count. And what's interesting is that's pretty typical of higher degree 5th wave situations. Not only is it a little bit difficult to count and say with a high degree of certainty that this is the interpretation, because I've been fairly confident in my analysis of this, the subdivisions of this trend off the March 4th low. Now it's becoming a little bit murky, which is pretty typical of higher degree 5th wave moves. Coming into the May 7th top, so here on May 7th, which actually looked like the resumption of this orange wave 5, it looked like we triangulated here in wave 4. That was orange wave 4, just a shallow 4th wave sideways, meets the guideline of alternation. But what ended up happening is this entire pattern, in my opinion, turned into a flat. It took us into a zone of support that we had identified for you guys at 40.50, so 40.54 to 40.58. The true low was at 40.56. But what's happened since then is a little bit tricky in that we have a 3-wave move back on the 1 hour, 3 waves lower, and now we're working at least 5 up. Could this be 1, 2, or A of B, and we're moving higher in a 5th wave? You might be asking yourself, wait a minute, you have A, B, C in a higher degree wave 1. How is that possible? Well, this 5th wave of the orange degree here, we have identified as a potential ending diagonal, because unlike traditional motive impulse waves, motive diagonal waves of the leading or ending variety can have 3-wave subdivisions in the 1, 3, and 5 position. Leading diagonals, 1, 3, and 5 positions can be 3 or 5. Ending diagonals, 1, 3, and 5 has to be a 3-wave subdivision. Typically, you want to see zigzags in 2 and 4. So could we look to explain the 3-wave move off of the low as simply one of an ending diagonal, and we're going to meander higher up towards this target? I don't have the answer to that. We are faced with a situation right now where we've had a move up in yields, a move down in bonds, and this is obviously pressured high multiple growth in tech stocks. And the move that we've seen recently has been a direct inverse correlation to the move in yields. So I'm going to continue to watch the 10-year. We did have, we have had some inflation surprises, predominantly on the supply side. We will have core PCE on Friday, typically the Fed's most favored in inflation measurement. So, you know, I do think that even if we are to see, you know, perhaps an uptick in continued inflation, and we do see the 10-year start to push towards 2%, even with a larger corrective pullback into the summer, I see this resolving higher from there. So it's all about your time frame. Some of the takeaways that you can keep in mind here: watch the 40.50 low. If we start breaking down towards that 40.50 low, that's when we have to consider the possibility that the move that we've seen here since May 12th is actually some sort of a flat. You have 3 up, 3 down, 5 up into a 1272 external retracement of B. If I were to draw a simple trend line from the March 26th high through the May 4th low, you'll notice we then tested it as support here, turning into resistance Very few sample sizes on that trend line, so certainly subjective. But if that's the case, maybe we do get a move back to 4,000 before a move up towards our longer term objectives. So that's the S&P. Before I move on, let me quickly take you through the Nasdaq, because in the Nasdaq, we do have some interesting levels that I think could give us a larger fourth wave correction ultimately. When and where that sets in, I think is still yet to be determined. So taking you back to the weekly chart from 2002, I'm viewing this as cycle degree wave 1 and cycle degree wave 2 into 2008. If you take a measurement of that, project it from the wave 2 low, you come up with a 261.8% multiple at 15,316. Okay, great. Inside of wave 3, if you subdivide that, one of the guidelines that Elliott Wave tells us is that when you have an extended third wave, a third wave that's clearly subdividable into 5 waves, it meets at least 161% thereabouts of wave 1. Sometimes you'll see wave 5 being equal to wave 1. And what that is simply this wave 1 here projected from that wave 4 low. That level for the Nasdaq comes in at 15,975. Notice it has confluence thereabouts with the 2618. That's a pretty interesting key level. We also have the 261.8% time relationship to the wave 1. That sets in March 6th. So, and that's March 6th of 2022. So I do think ultimately we will see possibly a move through 2% in the 10-year that does give us this wave 4 in tech and the Nasdaq 100. But I'm not smart enough. I don't think anybody's smart enough to say that this is certainly the move, because so much of this truly is dependent on what happens with inflation and the Fed. Okay, from the Nasdaq, let's go to the XLK. Then I have one additional chart, and then I'll bring it back to the team. So in the XLK, which is the S&P tech sector, the Nasdaq 100, I think 51-ish% technology, 40-some% of the XLK is Apple and Microsoft. So here you have an identical wave count, taking you to 2002, up in 1, down in 2. Looking at the 2618, just like the Nasdaq, the 2618 in the XLK is here at 142. Subdividing that third wave, 5V1 is at 142.57. Okay, let's see what happens when we get off the 2-week and take you down to the daily chart. Look what happened when price action in the XLK reached that upside price level. We've reattacked, we've fought back into this kind of contracting channel here in the XLK. Could the Nasdaq simply be our guide here, and we do get that continuation up into that zone? That's kind of what I'm looking for. Now let me take you over to the 10-year yield chart, because this is what you really need to be watching in order to kind of truly determine where this market could go. So we're up through a pretty key level that many expected to kind of hold as resistance between the 1.4 and 1.6s. But more importantly, I'm going to take you down to a chart where I have overlaid price action of the S&P with the 10-year yields. So this is going back to May 7th. May 7th, you have a low in the 10-year yield, which was a measured move correction. As we move up in 5 waves in the 10-year yield, that's when you get that sharp drop to 40.50 in the S&P. So far, we only have 3 waves back, and we only have 3 waves lower in 10-year yields. Very interested to see where this overall dynamic takes us. Core PCE Friday's on watch. We also have some earnings this week. We have NVIDIA reporting today after the close. And the final chart that I want to update you all on is the chart of Tesla. I had a request for Tesla, and I wanted to take just a quick minute and bring you up to speed, let you know kind of what I'm watching here. So in the chart of Tesla, we had viewed the move back into April 14th as a counter trend correction. So you have a directional move off the top, you have a counter trend correction back to the upside in the B wave, and then you have this 5-wave structure potentially carrying us lower. Resistance currently is offered down on the 1-hour chart between 616 and 625. I would look for that to hold between the 26th, so today, and the 31st. If that zone of resistance does hold, look for a secondary move to test 500. The reason I say that's a strong possibility is the fourth wave support zones are kind of stacking up. We have our 4v3 right here and our 4v2. So simply put, a quality of wave 4 compared to 2 and a 38% retracement. That's our typical zone. Here's our shallow zone. So if this is not a directional zigzag and this is perhaps an Elliott wave triangle, which we saw in the smaller degree wave 4, if that's the case, then we're going to defend the A wave low and we won't hold that as resistance, and we'll start to continue to the upside and consolidate further. So watch that zone of resistance. We've had a pretty nice move lower for any of you who caught it. Gosh, about 30% correction in the stock. The alternate count is, of course, that we're in triangulation. Now, if this is triangulation, it makes for a very shallow fourth wave compared to not only wave 2, but the retracement of 3. One thing it does have going for it is there are some similar characteristics at work between this possible Elliott wave triangle and the previous triangle, which originates back in September of 2020. Notice this B wave swing back, this kind of sharp attack in A, pull back in B, meander at a 45, 60 or so degree angle in C. Here we have kind of a similar attack in a B wave. If that's the case, instead of this being 1 and 2, this is A and B, and we're going to hold the A wave lows. I'm going to keep my eyes on Tesla. NVIDIA is also on our radar this week. If you guys are interested in more of what we do, I put out a nightly strategy video update going through the indexes, anywhere from 15 to 35 minute long video, depending on what we have for that day. So that's it for me, guys. Back over to the team. So
yeah,
thoughts?
NVIDIA has earnings after market today.
Yeah, they've got a stock
So
split as well that was
watch for
announced recently. That stock split caught a bid.
Yeah.
Caught a bid.
The stock split, buying of itself, okay, so you get 4 times as many shares, right? So buying of itself doesn't fundamentally change the value of the company or anything. It just dilutes the number of shares out there. But
yeah, and with brokers,
report,
with brokers offering fractional shares, it's like, you know, I'm surprised it caught such a rally on the split news.
I don't know why people are still doing that. I mean, you know, for many years, it just, if you can buy fractional shares now, I don't know that it really matters. You know, it used to matter because people like to buy stocks under $100, and then they had to buy a whole lot, so they had to buy 100 shares. They weren't allowed to buy partial lots, or if they attempted to buy partial lots, it was much more expensive in terms of commissions and took longer to make transactions. Man, that was 20 years ago, or even more. So, you know, in today's modern technology, it's all digital. So if you want to own Berkshire Hathaway A shares, you can buy a fractional share of that, right? Or you can buy 1 share, sorry. You can buy 1 share today, I know, at least on TD Ameritrade, and some of these other companies are allowing you to just invest. If you want to invest $100, you can just invest $100.
Absolutely.
Because they co-op it. So anyway.
All right, Terry, you ready to bring us up to speed on the world of sector rotation?
Yes, sir.
All right.
Let's go.
Let's hit it.
Hello, traders. I'm Terry Long here at tradinganalysis.com with your weekly sector focus. Now, I take a look here at these price charts as we are now in either this 4th or 5th week of this most recent correction here in the index. One thing stands out to me as an anomaly. And notice this past week, the S&P saw a 0.43% decline. Well, the Nasdaq actually saw a gain. For the most part, we usually see in each one of these weekly boxes here, we've been seeing the Nasdaq and the SPX essentially play out about the same. I think there was another anomaly week way back here somewhere that stood out. But this is an important signal, I think, to me, that the Nasdaq is about to, well, Nasdaq, I'll call it the NDX 100. The NDX 100 is starting to outperform the S&P here. I think this is just that initial evidence of momentum returning to growth stocks that we've been anxiously awaiting. And we'll look at some RRG charts of the sectors here in a minute, and I'll show you some patterns that are unfolding. As for the sector performance this past week, real estate was last week's winner, rising about 0.93%, followed by healthcare, utilities, staples, and even technology eked out a 0.15% gain. On the downside, energy sector was the week's biggest loser, declining 2.5%, with sector leaders, that's right, leaders, industrials, materials, seeing a 1.6, 1.5% decline, respectively. Let's take a look at Monday and Tuesday's price action here. So far this week, communications and technology sectors have kicked off Monday with a bang. Both sectors were up about 1.8% Monday, gave back maybe a little bit yesterday, but not much. I think Tuesday's price action in the semiconductors continued to see them push higher. And so here's technology back in the lead again. This is real estate. So real estate's our newest member joining us in the leading quadrant. And then we've got consumer discretionary. So that's I think that's quite interesting that we're seeing this transition. Let's go ahead and take a look here at the sector leaders. A little bit of a change up, but essentially our sector leaders remain energy. Let me see. Sorry, let's get this sorted by relative strength ratio. Energy, financials, materials, and industrials traded places, but they remain there. And then we have real estate and communication, and actually real estate overtook communication. So real estate continuing to advance higher. Here is the XLRE. Let me take you back just a couple of weeks and show you. We were forecasting the real estate sector with this strong relative strength move that started pushing all the way back here mid-April. I said, hang on, because here it comes. At that time also, we were watching the XLK with a slight improve, but continuing to move further into the lagging quadrant. We were seeing a rotation of energy and financials, which are leaders, out of the picture. They just started doing that. So now I'll advance you forward through the end of April. Right here, first week of May, we're on the border with real estate on the border, pushing over from the improving to the leading quadrant. Now we're clearly over here in the leading quadrant. Now this circle represents a 2 standard deviation filter of the move of all these combined sectors, and it squeezes and grows this way, and when the overall momentum and relative strength for the group shift. So it doesn't stay a complete circle. So I'd have to compensate with that by just doing a little bit of scaling here. All right, so in our lagging sectors, all but discretionary saw moves to the upside last week. Communication was still lower, but it did edge out above it. Let's look at this week's price action. So far, our leaders, energy and financials, are down 1.25% and 0.37%. Materials is still seeing gains, as well as industrials, but look at real estate, up 1.72%. Here's communications up 2.313, and this is these are live data now, not just Monday and Tuesday, but that includes a little bit of pre-market action this morning. And the overall S&P up 0.78 from yesterday. But let me just sort this by price. Now we can see here clearly communications, technology, discretionary, real estate, industrials, staples, a little bit of staples action there. We've been seeing that come up here. Let's go ahead and move over into the I'll take you into energy. And there are a few stocks seeing some gains this week. We've got Devon Energy, the only stock really outpacing the S&P at this point. Look here at the price chart I have on the XLE. Now we broke through this June resistance, but we hit a snag when we got up here at this $54 level. Retraced, found some support back here again at that June 20, a little bit below the 50, recaptured the 50-day simple moving average, and then back up here at that 54 level again, where it seems like we're knocking on the ceiling. A second or third attempt to push through that is getting rejected again. So there are additional overhead resistance levels in the XLE. The uptrend is still in play. The uptrend is not faltered. We haven't broken down just yet, but we are seeing some difficulty penetrating that ceiling. In terms of the relative rotation for the energy stocks, you can see majority of them down here in this weakening quadrant. Only Kinder Morgan holding out in the leading quadrant. Let's take a look at financials here. So we've got quite a few stocks here in financials outperforming this week. Majority of the stocks in the financial sector have relative strength ratios outperforming. But again, there's an overhead resistance level that's being hit with a lot of choppy sideways action here. Is this overhead resistance firm? Watch out for new breakouts to new highs. If we get another breakout above this 38 resistance level, financial stocks have much more opportunity to go. I'm not following my script very well here, but I want to just go on through this here. Let's come back here. I want to talk about consumer discretionary. So what I saw in the advancements here as I was seeing the hook formation here, here's technology. And this hook formation means that momentum is returning back to technology stocks. As we're starting to see a rising vertical, this y-axis here represents momentum. The x-axis is relative strength, so we're still lagging a bit, but we're starting to get a northeasterly vector. I think we're going to see technology push itself higher up here out of this lagging quadrant. Now, discretionary last week was the one sector that didn't really jump, and really it's kind of hesitating. So I'm looking for a signal for out of this discretionary to say, is it really going to continue hesitating, or is it going to join us here? Healthcare is pushing up here into this improving quadrant, and you can see staples. So not surprising that we see staples over here with a 0.42% gain. Even though it's in the lagging relative strength, it's got horizontal motion. So in its current vector, it is pushing higher in terms of relative strength than the S&P. So on a delta change, it is seeing some gains. So is utilities, but really utilities is the underperforming. It is continuing to lag. Relative strength is lower. Utility stocks are much lower today. I'm going to focus on the technology sector. So we're not going to run through all of these guys today. But let's take a look here, because I think eyes are back on the technology sector this week. It's currently ranked number 7 out of our 11 sectors. And let's take a look here. This is the chart of the XLK. This is November 1st. You can see there's been an uptrend in progress in the XLK since November. But what we see here in these corrective periods is we see some overlap. The question on the table now is whether or not I think we're going to find support here and continue higher, or do we see a further breakdown in price performance, which could take the sector lower. Now, as we saw in the sector RRG, the sector is down in the lagging quadrant, but has now started forming a northerly hook, which indicates a recent return to rising investor interest and momentum. Now, stocks advancing higher this week in the XLK include Applied Materials up almost 8%, NVIDIA up 5% ahead of earnings announcement after the market closed today. Lam Research, one that Bennett's been following closely, is up nearly 5%. So we're starting to see these semiconductor plays jump back in here. Here's Adobe, which is a software company, up almost 4%. PayPal, FinTech, Autodesk, Analog Devices. Here's Microsoft up 2.5%. KLA is another semi, and Salesforce. So there are quite a few. Now, not all stocks in my technology. And this is the top 30 by market cap. So these are the large caps, right? Only Cognizant and IBM are showing any kind of negativity in my group this week. I do want to also share with you the semiconductor subgroup here of the XLK, which also saw some significant gains this past week. And again, this is narrowed down, so I'll take out everything except semiconductors. Again, Applied Materials, ASML, NVIDIA, Lam, Marvell, Microchip, the list goes on. We're seeing, if you look here, let me resort this. It's out of order. Let me resort it. There we go. Every one of these stocks I have in the semiconductors is outperforming this week. It's showing huge gains. The relative rotation, semiconductors got beat down pretty strongly. And I'll take you back a little bit of an animation there. We saw these guys, we actually saw quite a few of them push over here into the lagging quadrant. But if you'll notice, we started seeing these hook formations. These hook formations say the bottom or the selling pressure may be starting to ease, as if momentum shifts, that means investors, and that really means institutional investors, are finding value here, and they're starting to pump money back into these stocks. Now just look at the number of stocks that you see here with continuing hook formations. As we're starting to see, well, not starting, but we're continuing to see additional rising momentum back here in many of these semiconductor plays. So I see several signs of a new shift in sector performance on the horizon. Now, this may be too early to tell, but I think the evidence is building that momentum in technology stocks is certainly starting to rise. I will turn it back to you, Bennett. Thanks, guys.
All right, nice job, Terry. Excellent work, sir. Markets are just now opening up. Keeping our eyes on the opening bell here. We did see the question for gold. We're going to pass it over to Alex here in just a second. If we could get him set up as presenter. Let's see, make presenter, Mr. Alex. All right, sir, the screen is yours, coming at you.
Sure. Let me just... okay, so... Okay, all fine.
All right, let's jump into it.
Okay, so I'm going to do a little bit of macro overview, and one of the interesting things that I'm looking on this inflation scare. This is something which we are tracking with our members in the Forex section. And of course, we track yields because of the interest rate differentials and all of the stuff, because the yields are basically impacting many of the assets classes. And this is the 10-year German Bund price. So it works inversely of yields. And if you look this chart very carefully, you will see that from the beginning of the first financial crisis, or if they call it first GFC, from 2008, the price of or demand for the 10-year German Bund has been steadily rising, and the yields were falling. Okay, so if we put that in the perspective of the possible wave count or try to see in which actually phase we are in this risk-off move in a sense of the yields. So if the yields are moving down, stocks are going up, but it's a risk-off in regards of the perspective of the yields going higher. So I don't think still we have to be that crazy on inflation. The Central Bank of New Zealand, which I don't find to be very kind of wise through the last years, and we had some experiences with them, announced a possible interest rate hike in middle of 2022. But if you look this chart, you will see that if we put some wave counts on it, we have been going up in one, a nice flat into a very nice discernible wave 3 to the upside, reaching 2.618 projection, which is one of the secondary ratios after 1618 for the possible wave 3 target. Usual stuff for the fourth wave is to go out of this kind of a growing channel, and we witnessed that over time and time looking the fourth waves. And I think actually we are going to fall in a triangle in these possible moves in a price. So the yields might fall just in a triangle, which might be long for a year or two. And as long as this support actually holds around 158, and we don't see a clear 5-wave move lower, I don't think we have to be so much scared of this supply side bottleneck inflation. So if you can see here on this weekly chart, the RSI is pretty much low, down to 20. And we have posted from the highs only 3 waves down, which means that the German yields, which are pretty much representative for all Europe, just staged a 3-wave move on the upside, and they're still trading in the negative territory. So what actually this picture or a chart explains is that if we fall in a drawn-out consolidation sooner than later, we will fall into still deflationary mode with this 5th wave on the upside. So as long as we are moving sideways and in within of these boundaries for a potential larger degree 4th wave, and especially if we continue to move sideways, I will not be so scared that we are going to see, at least in Europe, some move or some extensive move on the upside in the yields. And I will pretty much look this chart as an orientation in regards of the potential deflationary move after this consolidation, either in triangle or a complex WXY, holding this support zone completes. So as Todd was reiterating many times on this public trading analysis free show, I kind of agree with him that possibility is still much more that we go in price of the bonds on the upside after some consolidation, at least in Europe. And for now, this possibility, I think, has a more probability than we are going to actually move and pass these support levels around 156. So I will be holding a bit kind of an inflation scare. So this inflation scare can also be transitory, as the Fed is implying. So I think this chart is very telling and explains for now a lot of this stuff that is going on. And so I just wanted to show you what we are looking on that front. So let's go a little bit and look some of the charts also that we are looking with our members. So let's look a little bit of dollar index. And dollar index is still, we have a few scenarios because I see some of this dollar also kind of pushes lower in impulsive mode. I still don't think, I think this is a very small for a possible wave 2 or a wave B. I still think, and I will put this in a more of the context that Bennett is presenting, that we are in a possible fifth wave, and that move up in dollar still going to come in a corrective mode. And I'm kind of watching. I don't have any firm opinion about this because I don't see some significant move lower, only if we do a three-wave pullback here on this wave count, a shallow one, and then we start to continue impulsively to the downside. I can basically lock down this wave 2 or a B wave on a dollar index for a possible measured move down to 78.80 in a dollar. So I still don't want to commit to this wave count or structure any trades. We have been advising members more likely to look on this Japanese yen crosses, which has been moving pretty much nicely in the last couple of weeks. We have seen a nice move up in a pound yen, which we think it's going to continue a little bit more. Also, dollar yen may be forming one of the smaller degree possible corrective flats or a triangle, because I don't think this impulsive pattern on the upside has been completed. So I'm looking a little bit more on the upside on that front. If you see Aussie dollar, if you see also Euro dollar, who has been advancing a little bit more on the upside. So same conclusion. I don't think we are in a wave 2 or a wave B, and this is a beginning of a new trend. And still, I will be looking this pullback, which might come soon, of a nature of it, and then make a final conclusion on that. I still also think that this will be still a orange wave 1 or a wave, and that we are going to do some pullback on that front as well. Copper is kind of a stalling in its move on the upside, so I think maybe we are going to see a little bit of a pullback in these commodities as well. So looking at the gold, because I see people are interested in gold very much, we have been very vocal that we are not going to be so bullish until we see a clear 5-wave move here. So this 5-wave move still didn't unfolded, so it has to look something like this. So from these lows, we need to see clearly a 5-wave pattern to be bullish after a pullback on gold. Okay, in that case, also euro-dollar wave count will be pretty much solid, that we are going to see just a second wave pullback in already beginning C wave or a third wave on the upside. On the other hand, I want to see how we are going to behave here on a possible X wave and a further move down in gold. I don't think that many of market participants looking their bullishness still think it is possible. So I still have to technically leave that option alive and actually look what is going to happen here, because you can also, from the Elliott wave perspective, characterize this as a W. We have an ABC move in a lesser degree WXY. Equality is exactly here. So if I see a 5-wave move lower and the extension of that passing this X wave, I think we are not going to see a further advance in gold, and we are going to be longer in this fourth wave before we start to push higher. So for now, I still cannot be bullish gold because our preferred methodology doesn't give us a finished 5-wave move. If you look the move from these lows, there is a wave 1 and 2, and then we have to count this as another 1, 2. This should be a third wave, orange wave 3 on the upside, pushing around close to 1,950. Then we are going to see a fourth wave pullback, and then a break of this X wave in this fifth wave, which will be this possible signal that we are going to just see a second wave pullback and then a gold continuation. So we are still in a no man's land, in my opinion. Only after rigorously following our methodology, if we see a 5-wave move, I will become more bullish on gold after this small correction presented here. Silver as well. Silver is in a big consolidation yet. So for now, we are waiting the same wave count. If we structure and see here a 5-wave move, which we don't have yet, if you look here, we don't have very clear a 5-wave move. It looks more something like still ongoing triangle. Possibly this was a wave A, triangle in B still ongoing, or some type of a flat. And then when this is actually completed, we can actually count possibly for some other move on silver in tandem with gold on the upside towards. We have some pretty nice targets, but a post-triangle trust, if we get it, can be around 45 or 63. Provided we do kind of find some tradable low and we have some confirmation that we are moving on the upside. So I will not be so in hurry to hold this move on the upside until clarity is given by a clear 5-wave move. So let's switch to cryptos. And I have several things to show you on cryptos. So let's first look this Ethereum wave count from the lows in 2017 December.
Hey, Alex.
So yeah.
Can we touch on Bitcoin and save Ethereum for your show tomorrow? We've got a couple things we've got to get to before the member webinar.
Okay, sure. Okay, so let's keep on a Bitcoin. Same thing. We have a 5-wave move up, a pullback here, and then we reached up to 1618 projection. We also had some of the lesser degree moves. So outflows has been big. I'm still gonna stay on stance. We are going to have a little bit of small crypto winter. I don't see very recovery here in 5 waves. Looking for a further move on the upside. It might happen. Maybe I'm wrong. Maybe this is just a lesser degree wave 4. But I judging the environment currently, the yields, the stock market, and all of the other external influences, especially what happened in China regarding miners, I think crypto market will need some time to consolidate and basically staged out either a 4th wave triangle or a WXY. So my 2 targets, if I'm right on this correction, will be support in 30,000, 28, 30,000, and the secondary one will be around 21, 20K, which is actually matching very nicely with this base channel, which you can see here, which is a usual kind of a support level if you have a little bit more deeper 4th wave. As the time is concerned, I think if I'm right on this, we might go in this consolidation up even to January or December 2021, January 2022. So if you want to see more on cryptos, so tomorrow is Crypto Lab. We also preparing a nice webinar for the next week for the crypto lovers. So be in touch with us and see you next time. So back to you, Bennett.
Very good, Alex. Much appreciated. And I'm just now dropping a link in the chat for our Trading Analysis YouTube channel. We host his show over there tomorrow morning, so every Thursday, 9 a.m. Eastern. Looking forward to that. All right, guys, excellent show. The markets are open here. S&P's pulling back from that 4,200 area, currently testing 4,190. Looks like Tesla's going for that 600 handle, so keep your eyes on that. We do have some exciting stuff coming up. Again, in July, we've got an event planned that it's a kind of a workshop event. I think you guys will really enjoy it. As mentioned, we have a crypto webinar coming up. We're going to be talking about everything that's going on with this pullback, of course, you know, how this possible 4th wave will fit into the bigger picture. We'll take a look at potentially some historical fib relationships to help substantiate our support levels into that wave 4. So, all right, guys, excellent show. Appreciate it. You can check us out anytime, tradinganalysis.com. And apologize once again for last week's technical glitch. We'll be back with you guys same time, same place. If you did enjoy the content, please give it a like. It lets the YouTube algorithm know that you do enjoy it, distributes it accordingly, and of course comment and subscribe with notifications if you want to stay up to date with myself, the rest of the Trading Analysis team, and of course Mr. Todd Gordon. He should be back from his follow-up here shortly. So that's it. Any final words, guys?
Thanks, guys, and have a great week.
Yep, good show, members. We'll see you in the member webinar here in about 15 minutes or so. Take care, YouTube. Catch you guys all next week.
Yeah, see you guys.